Welcome back, traders. Welcome back once again to the Banknifty post-market analysis. Uh, as expected, today was an eventful day. We never, uh, we never thought this is going to happen, but market is always unpredictable, and it's highly unpredictable as always. Let's see the daily chart of the Bank Nifty now. This is the 10th day the market has gone up. Now, if you just see this chart, this completely gap up open and then it just broke away the resistance. Yesterday we were discussing this particular point about the spin bar. This pin bar at a key level is very important, but what happened is the market gap up open and then you can form a doji pattern at the top. Now you can see the strength of the candle. You can see there is a decrease in the strength of the candle as and when it is reaching a point. I don't know whether we can call this as a resistance point or a point where it can retrace or a small reversal is expected, or you can think anything. But you can see in this place you can see there are sellers who walked in and the buyers showed the strength, and again the next day market opened with some bullish note and then market again pushed up. Here you can see this particular wick portion is the presence of sellers here, meaning if the sellers are here then the market definitely comes down, and then again buyers are very strong enough to push the market up, and again here the buyers and sellers fought together, but there's not much of a interest shown for the downside nor for the upside, so it's formed a doji. Excuse me. Now to get into a little more details about it, let's go to the 15-minute chart here. You can see the market gap up open and started pulling down, and then it started moving upside. We took in the live market trading, you would have seen that we've taken a call position, but what happened is the call did not move much and started taking the stop loss of us. At this point I think we gave the stop loss for that, and then we had like two put positions after that. We were the market was not continuous in the sense, like it was coming down, going up, coming down, going up, and then it was creating a highly volatile situation, and then it went through a point. People were giving it up in the sense, like the people who traded the positions were not able to hold the position for too long, even for the put side or for the call side as well. So just to have a fair understanding how the market is looking at this current moment, you can see there is a flag pole pattern which you can see at this moment. The flag pole pattern, you can see there's a big up move, and then you can see this is coming as a downward channel downside here, and we can see this is actually taking resistance and supports at this particular channel. So what would be the ideal situation for me to trade, or logically what we can think is, if the market is trading above this particular level, which is 38,850 levels, we can think about going a long position, because the still market is showing the bullishness. The market is still bullish. It's showing no weakness into the market. It's just that we are thinking about a retracement and the market is not giving the retracement, and I would rather take a put position only and only if the market is trading below 38,600 levels in spot, not in future. I'm talking about in spot. Only at this level I would be interested to go for a put. It can be a happening day tomorrow, or it can be a dull day tomorrow. It can be very interesting, or it can be a very boring day, but something is going to happen, and that's how the market is readily placed at this particular point in time. Hopefully, like if things go well, we can see a very interesting expiry day. It can be a trending expiry day, or if things are not so great, the market is going to go flat and then expire at this position, because there are so much call writers and put writers keeping their positions very strong at their levels, because they have huge quantities and huge money inflows into this kind of levels what they are going to hold. They are holding that level very strong. You can see the minute market came down, you can see a strong buying power from this particular range. It never gave this low here, and in fact we took a trade exactly at this particular breakdown, in the sense like this breakdown. We took a trade and then it again went back and then started pulling down, and we exited exactly at the day's low position here, and we made a decent profit. We had a loss earlier, and then we could recover this because of this particular trade. And during the trade, we went through an emotional, stress, because the market is not, this particular level was getting knocked here. For example, I'll just put this here, where exactly we were thinking that the market is going to actually, break down initially. I'll just remove all the drawings so it becomes easy for you guys to understand what exactly I mean. See, when this was happening, see, this was the first clue that market as one time dropped, and then this was a freak move because it immediately went up, and then this was a constant move down. And we took a trade when this level was retested again. When the market was coming down, we took a position in this level, and we gave the stop loss about this particular point. And again, we were just waiting for that next move, and then we took a trade exactly when this candle was forming, and this area was getting consolidated. In the sense, if you just mark this is a 5-minute chart. If you mark this particular area, this was consolidating for more than 6, 7, 8 candles here. So the minute it crossed this particular level, I initiated a trade here, and then again, as expected, it didn't do the way that we expect to do. Just pulled back again and scaring the people off, and then started coming down. And after this, we thought it's going to actually pull down, but I was having a 50-50 chance in this, because I know expiry day would be the day which these people might be interested to make a move, either upside or downside. So this again pulled up, and then it went upside. So let's see how market will be behaving tomorrow. As per the data, it shows still bullishness is intact, and as per the sentiment of the market is bullish, but by financial statements by most of the people who think that the people have to make some profits, the profit booking has to come in any time. So that way, and it's not too good for the market, like market overextending itself. You cannot expect the market to go like this. It's not good, and it's not a healthy market as well. Just imagine, one day the market is moving continuously without giving any retracement, which is not good for the market either. It should have a stop, it should breathe, and then it should go up. That's more like a healthy market. Now this seems like it's going one way, and it's most unlikely this is going to happen another 2-3 days like this. So let's hope for the good things, it can happen. Maybe the people who are holding the puts, thinking that market is going to come down, make some money. I'm also still biased on the downside. It's not that I'm biased on the upside. In case if it's going up, I will be taking only half the quantity. But in case if it's breaking this level, I will be taking a normal quantity, a full size quantity. And my first target would be this particular level, which is 38,500 levels. There's a round number as well. So I'll book my positions at this level. In case if I'm getting a good entry, it's not a bad trade either. So roughly about say 150 odd points. But anyways, if market is holding to this in the range in the morning, at least for 1-2 hours in the morning till 12:30, and then if it's breaking down this level, then you can see a flurry in the market. You can see a panicness into the market. The sellers will go for the covers, because they have to cover the positions now. They have to run for the cover. So you can see the levels getting broken. If one swing low is broken, then obviously the next swing low, it will be tested. And if this swing low is being tested, then you are looking at a continuous breakdown of all the swings here. This position, and this position will be tested by the market. So hope everybody is clear about this particular strategy. But I keep that in a strategy way. So trade with caution. Don't rush on the trades. Don't predict anything that market is going to do like this. Watch the data and then enter into the market. Keep your position sizing reasonable, so that even if market is turning back, you still will be able to hold the trades, or within your financial money management. Just take care of it, and hopefully we'll have a good trading day tomorrow, either upside or downside. So meet you in another post-market analysis. Thank you. Thank you for watching our video. Please do subscribe, And disclaimer, please consult your financial advisor before taking any trade, and we will not be responsible for any of your losses. So please take care of yourself and happy trading days ahead. Thank you.